Twitter criticism. Right now, I don't know what I'm going to read. Maybe I'll try Al Jazeera, but not. I'm sick of Israel. I'm going to read economy. I will skip the look. To start in Qatar, artillery airstrikes hit Gaza. Ceasefire talks due to start in Qatar. Ceasefire, but look at this. Gaza is completely destroyed. Completely destroyed. So I'm trying to skip all this craziness. I'm going to try to read some economy. Very unusual news. I'm going to read this. Economy, inflation. U.S. inflation slows in July. In July, clearing way for a cut in interest rates. Prices are still rising sharply for the services. We have a photograph of a store, a grocery store. The ongoing inflation slowdown could affect the U.S. presidential campaign, given that former President Donald Trump has highlighted rampant inflation as a key falling of President Joe Biden's administration. August 14, 2024. Year-over-year inflation has reached its lowest level in more than 3 years in July. The latest sign that the worst price spike in 4 decades is fading and setting up the United States Federal Reserve for an interest rate cut in September. Wednesday's report from the U.S. Department of Labor showed that consumer prices rose just 0.2% from June to July after dropping slightly the previous month for the first time in 4 years. Measured from a year earlier prices rose 2.9%, down from 3% in June.
Es una risa gratis que de mi parte te lleváis, aunque tú no compráis, dices que lo rico que miráis, probáis, le gustáis, es Fly. Te encanta ver una sonrisa en tu pasar. Dicen que aquí el dinero nunca lo han botado, algo rico dulce fresco que yo he inventado. Rico es Fly, con el dinero conmigo, no lo botáis.
From July, after dropping slightly the previous months for the first time in 4 years, measured from a year earlier, prices rose 2.9%, down from 3% in June. It was the mildest year-over-year inflation figure since March 2021. The ongoing inflation slowdown could affect the U.S. presidential campaign, given that candidate and former President Donald Trump has highlighted rampant inflation as a key failing of the administration of the incumbent President Joe Biden. However, consumers tend to look at prices of everyday items like groceries and petrol as well as the health of the stock market, and their views on the state of the economy is based on that as opposed to overall data, said Ryan Sweet, chief U.S. economist at Oxford Economics, adding that lower inflation was not an automatic win for the Democratic Party. The government said nearly all of July's inflation reflected higher rental prices and other housing costs, a trend that, according to real-time data, is easing. As a result, housing costs should rise more slowly in the coming months, contributing to lower inflation. In July, grocery prices rose just 0.1% and are a scant and are a scant 1.1% higher than they were a year earlier. A much slower pace of growth than in previous years. Yet many Americans are still struggling with food prices, which remain 21% above where they were three years ago. Though average wages have also sharply increased since then. Petrol prices were unchanged from June to July and have actually fallen 2.2% in the past year. Clothing prices also dropped last month. They are nearly unchanged from 12 months earlier. New and used car prices fell in July too. Used car prices, which had skyrocketed during the pandemic, have tumbled nearly 11% in the past year. Some food prices, including for meat, fish, and eggs, are still increasing faster than before the COVID-19 pandemic. Dairy and fruit and vegetable prices, though, fell in July. Wednesday reports show that inflation is steadily falling closer to the US Fed's 2% target, though not too quickly, which might suggest that the economy is weakening, said Tara Sinclair, an economist at George Washington University and former Treasury Department official. Quote, "It's a comforting report, both because it is going the right direction and because it is not doing anything too dramatic," Sinclair said. "It is exactly what we wanted to see." Sweet said that while the July data keeps the Fed on track for a cut in interest rates in September, quote, "Don't hold your breath for a surprise cut," adding, quote, "The call for a 50 BPS cut is an overreaction." The U.S. Central Bank has held rates at a 23-year high of 5.25 to 5.5% for more than a year, and Sweet was referring to statements from some corners of Wall Street for a cut of at least 50 basis points, after data earlier this month showed that the unemployment rate has shot up to 4.3%, flaming fears of the U.S. economy heading towards a recession. Basis points are a standard measure for interest rates, and 1 basis point is 100th of the percentage. Economists have put that jump mainly to an influx of job seekers, especially new immigrants, who haven't immediately found work and work and so have been classified as unemployed. Austin Goolsbee, president of the Fed's Chicago branch, said Wednesday in an interview with the Associated Press that the July data shows that inflation is clearly on track to return to the central bank's 2% target. He also noted that there are signs that the job market is weakening even while the Fed's key rate remains at its highest level in decades. Goolsbee's remarks suggested that he will support a series of rate cuts in the coming months. Quote, "If you take the last 7 months of last year and now the past several months, they show very strong progress on inflation," he said. "And the employment side is at least cooling. So I think it is worth our thinking about that quite seriously." Price cooling. For nearly a year, cooling inflation has provided gradual relief on U.S. consumers who were stung by the price surges that erupted 3 years ago, particularly for food, petrol, rent, and other necessities. Inflation peaked 2 years ago at 9.1%, the highest level in 4 decades. In July, including volatile food and energy costs, so-called core prices climbed a mild 0.2% from June after a 0.1% increase the previous month, and compared with a year earlier. Core inflation slowed from 3.3% to 3.2%, the lowest level since April 2021. Core prices are closely watched by economists because they typically provide a better read of where inflation is headed. When the central bank lowers its benchmark rate, over time it tends to reduce the cost of borrowing for consumers and businesses. Mortgage rates have already declined in anticipation of the Fed's first rate reduction. At a news conference last month, Fed Chair Jerome Powell said that cooler inflation data this spring had strengthened the Fed's confidence that price increases are falling back to a 2% annual pace. Another inflation report will be issued next month before the Fed's September 17-18 meeting, with economists expecting that report to also show that price increases remained mostly tame. Inflation has eased substantially in the past 2 years as global supply chains have been repaired. A spate of apartment construction in many large cities has cooled rental costs, and higher interest rates have slowed auto sales, forcing dealers to offer better deals to potential car buyers. Consumers, particularly lower income ones, are also becoming more price sensitive, foregoing high-priced items or shifting to cheaper alternatives. This had forced many companies to rein in price hikes or even offer lower prices. Prices are still rising sharply for some services, including auto insurance and healthcare. Auto insurance costs have shot up as the value of new and used vehicles has soared compared with 3 years ago. They jumped 1.2% just from June to July, defying expectations for a smaller gain. I hope the worst for Americans.